what's up y'all? Welcome back to the channel. Cathie Wood of ARK Invest buys more Tesla. Take a look right here, Alexandra Mers, the credit goes to, and again, more Tesla for ARK. Tonight for ARKK and ARKQ for a total of $6.5 million. As you already know, Cathie Wood is a big fan of Tesla at the moment, and they have been buying every single dip in Tesla. With the total of 14 purchases in the last 3 months, or last 3 weeks rather, that they have bought more than $91 million worth of Tesla. Followed by 12 million, 1 million, 4.6 million, more than 4 million once again, 3 million, so on and so forth. And lastly, they bought it for 6.5 million pretty recently. This is the tweet from January 6th, as you see on 8:07 p.m. on Friday. With that, ARKK and ARKQ, they have been buying Tesla, ticker symbol TSLA. Cathie Wood has been very bullish, more than ever on Tesla, as you can imagine. Take a look right here. Cathie Wood also suggests that Tesla can be more than $500 within next few years. Let's find that out, why and how that can happen. According to @Tasha and @SKORUS ARK's research, Tesla does not need autonomous ride-hail to be success. The EV opportunity alone is enormous. Now, what they are referring to right here, and Tasha is saying this: removing autonomous driving and any form of ride-hail, which we believe will drive more than 60% of Tesla's value over the next 5 years, our 2026 price target would become roughly $500 per share. And this is post-split, which is at the moment whatever the price value you see for Tesla. If you remember, Tesla had not a great last couple of months. Take a look right here. For last 1 day, we are up 2.47% with $113.06 closing price. For last 5 days, Tesla is down 5.67%. For last 1 month, it is down 34.81%. So last 1 day, once again, if you take a look at NASDAQ, was up 2.56% for last 5 days. NASDAQ was pretty much flat, 1.91% up, where Tesla was down 5.67%. Even more, for last 1 month, NASDAQ was down 4.63%, whereas Tesla was down 34.81%. So there is a lot more fuel into Tesla if the market rebounds and start getting into green. Not even green, if it starts stabilizing, Tesla will be a big runner. So once again, $500 per share post-split, which is based on EV alone. More than 4x increase from the current price point, as we are at $113.06. If you think about more, the EV holding other than Tesla in actively managed ETFs with major Tesla exposure, I really wanted to share this with you. Now, if you take a look right here, all this yellow is the Tesla holding ARKQ, 7.33% in Tesla that they hold at the moment, whereas some of all the other EV makers is right here in blue. So they own Tesla 7.33%, whereas all of the rest EV makers, they own about 5.42%. Again, for the fund FFND, 8.39% Tesla, 2.79% is the rest of the EV makers. Same for GK, 5.65% of Tesla and 2.04% of all the other EV makers. VCAR, 225.43, whereas 1.77%, and same for YAll, 8%. And they have none of any other EV makers. So this is once again a pretty big holding. Added green font for the increased allocation, as you can see that they have increased. Could be due to the stock price or due to the increase in number of stocks. The orange is the decrement or decreased allocation, as you can see. So they are decreasing in some of the stocks like Rivian right here. So on and so forth. as the market goes up and down. We have been seeing a ton of news around Tesla stock. Never has been this inexpensive. Is this the right time to buy Tesla or go all in on Tesla stock? Do you think Tesla is just one of the consumer of the EV play? Then it's not the compelling buy. But if you think Tesla will become the major player in commercial trucking industry and be a leader into an autonomous technology, then it's a great time to buy. In my personal opinion, it is inexpensive buy at the moment, around $113, $115, but I'll leave it up to you. Remember, this is not a financial advice, nor I'm a certified professional. So do your own due diligence and research before you buy or sell. At the least, I just ask you to hit the like and subscribe button on this video so this information can reach out to more and more people. Tesla stock has never been this inexpensive as you see on this article, but there are some good reasons for that. The sell-off was largely due to Tesla's disappointing delivery numbers in Q4 2022, which were released on Monday, as you already know, last week when the market were closed. Tesla achieved a record delivery of 1.31 million vehicles in 2022, including 405,000 plus deliveries in Q4 alone. But many analysts such as Wedbush Securities were expecting Q4 delivery figures in the range of 415,000 to 420,000 vehicles delivered, which did not really happen. But it did not really fall a short ton more than the numbers were. And as you already know, there is always a risk into a business when it is exponentially growing. Tesla produced 8.5% of more vehicle than it delivered for the quarter. It remained to be seen if the gap between production and deliveries were due to the decreasing demand and or logistic issues. Either way, the lower than expected delivery numbers add yet another cause for concern for this particular stock, as you can imagine. But Cathie Wood kept buying Tesla and it got a ton more attention by the media. Take a look on Forbes. Cathie Wood buys $19 million in Tesla stock as new major worry emerges. CNBC also reported on their Twitter handle, Cathie Wood buys more Tesla to start 2023 even as relentless sell-off drags down her flagship fund. And with that brutal rout, Cathie Wood's electric vehicle company, or LO, which is Tesla, they put massive pressure on the flagship fund and kept buying more and more. And Cathie Wood is all about Tesla. As you can see, January 6th, she also pinged some stuff or tweeted stuff about Tesla as well. She is the founder, CEO, and CIO of ARK Invest. Now, what happened to Tesla? 111 million is the average volume. Their volume Friday was 220 million. With that, their price target, as you see right here, is $226. But we have seen better price targets on tip ranks by the tip ranks analysts, as you can imagine. What I wanted to quickly show you is how the volume has been through this days, when we see Tesla at $103 and it went as high as with a big swing of $114.39. Our volume was 220 million shares. The volume is number of shares transacted on a trading day / trading session. So think like how many Teslas were sold and bought just within one day. One thing I wanted to point out is we did not really see the volume about 200 million in last many days, which started spiking through the roof. Starting December 22nd, 220 million or 210 million rather, when we went from 148 to $122. Again, when we went to 123 and $117, as you can see, again we did the high of 221 million in terms of the volume. We went higher in terms of the volume at 104, even higher at $103, and we routed back or swing back real quick to the high of $114.39. I just wanted to leave you with this particular analysis. I hope you like this. If you did, hit the like button, but take a look. Our moving average is this red bar, as I'm highlighting right here, which is $171.59, which is looking pretty bullishing or pretty bullish to me, whereas the blue line is the real-time price. Blue line is the real-time price, 113, and the moving average 171. We can, even if meet in the middle, it really is looking for $150 to $153, as you can see. And once we cross this particular line, which is going to be our resistance at $164.43, we can easily expect close to $200 as the next support, or $194 rather and 70 cents. If you take a look right here, this is the RSI, relative strength index for any stock, looking pretty promising. 31, it is more of an oversold condition, which means there is more buying coming. I hope you like this video. If you did, do hit the like button, subscribe to the channel. I will come up with pretty interesting information very soon. Thank you for watching.